The first 15 minutes of the open can make or break your trading day. If you don't have a plan, you're pretty much just gambling. But today I'm going to show you how to trade opening drives. Opening drives are something that I've been doing since 10 plus years, since I started trading options. This is one of the best setups for momentum traders, but only if you have your analysis and your plan on point. Let's get into it. Now, the opening drive is all about capitalizing on the momentum that the stock opens up towards and pushes towards. The goal for day traders is to ride that momentum and catch as much of that initial spike in the price and the premiums as possible. Day traders love the opening drive, but they're not able to find high probability setups because they don't know what to look for. Specifically for option traders, because it brings a lot of volatility, usually you get a very quick and decent return in a very short period of time. Now, usually around at the open, you have a lot of volume coming in. This volume is coming in from institutions, hedge funds, pretty much the whales of the market. And our goal is to join the momentum of the direction that they're usually going for. And to do that, you want to pay attention to what's happening on the longer time frame, right? I'm pretty sure you guys heard that term, the trend is your friend. You want to look for the overall trend that's forming on the longer time frame, and we come up with a trading plan based on that by doing multi-time frame analysis or the top-down analysis. So let's break that analysis down. First thing is you want to look at what's happening on the bigger picture. If the stock is on the uptrend, downtrend, or if it's on the sideways price action. If it's on the sideways price action, it's very hard to come up with a trading plan. But if the price action on the longer time frame is pushing up or down, it becomes much easier because you know which direction majority of the traders are trying to take the stock towards. All right, so let's go over the pre-market analysis. Once you found a setup that has a trend, right, that's something that should be done the day before, not doing pre-market. It should be the day before or over the weekend. And once you know that, hey, this stock is going in this direction on this longer time frame, now you focus on the shorter time frame for that opening drive. Now, during pre-market, you want to make sure your key levels are on point. Major support and resistance and minor levels as well, which are coming in from your intraday time frame. Then we identify pre-market high, pre-market lows. We look at if there is a catalyst. Now, the catalyst is going to be a major factor in every single opening drive. So a catalyst is, it could be in news, it could be earnings, it could be anything revolving around that stock. So for the upside, you obviously want something positive. For the downside, you want some sort of negative news that could be impacting that stock. Once you've kind of pretty much analyzed the overall trend and the pre-market breakdown of what the catalyst is and so on, the second step is you wait for a pullback, right? Right at the open, we want to see a little bit of a pullback happening, right? If it's towards the upside, you want to see the stock pulling back just slightly a little bit, retesting a previous level. And if it starts to show some sort of rejection and aggressiveness from the opposite side, that's where you want to start looking for an entry point. So typically, I like to give these trades a few minutes into the open, anywhere between 2 to 5 minutes. So once the first 5-minute candle is closed and it shows that there is rejection coming in, and we might test if the stock is pushing on the downside and we see a pullback towards the upside and you see a rejection coming in and sellers start to get aggressive, then that's where I'm going to look to short the stock. If it is moving on the upside and during the pre-market high it's pulled back, testing a previous level, and now it's coming back to retest that pre-market high level, that is where we try to enter the opening drive. Now remember, you need to have a catalyst. When it comes to taking profits, right, there's two things you want to look for. One is slowing down of volume, which indicates that there is loss of interest. And second is as the stock pushes further into your favor, start scaling out. I preach that a lot on almost all my videos, that you want to take a little bit profits off the table. You want to make big gains, start sizing up, but you still want to scale out of your winning trades. Now, momentum usually dies very quickly on these opening drives, so you want to also implement increasing your stop loss, also known as trailing stop loss. I typically do this manually. As the stock is overtaking a new level, I increase it by moving my stop from one key level to the next key level. And as it moves further away from my entry point, the safer I consider that trade, or a high winning trade. So now let's put this all together. I'm going to show you guys a trade I took in CRWD, which is CrowdStrike. This stock was already trending towards the downside. Let's break that trade down and I'll explain why I took the trade, and we'll try to put everything together to show you how the trade worked out. All right, so this is the daily chart on Crowd, and you guys can see we took the trade on the 24th. But leading into 24th, right, what is happening on the daily chart? Like I mentioned, you want to make sure that the longer time frame is trending in that direction. So we have break of that 420 level, and going into that 420, look at how we have that volume built up, right? The way I look at volume is that it shows me how many people, how many traders are interested in that new price point on the stock. So the lower it moves and higher the volume increases, that means there's a lot of interest. The higher the stock moves, the higher the volume, shows me there's a lot of interest. If the volume drops, that shows me there is a lack of interest from buyers and sellers around that price point, and price is most likely going to reverse. So with this, right, the second thing you want to do is now you move on to your pre-market analysis. It had a catalyst that day. So let's move on to the 5-minute chart. All right, so the trade was taken somewhere around 9:37. All right, and that is after that pullback came in and we started to push down on the next 5-minute candle. All right, so this is the initial 5-minute candle, right? We pushed down, we held, and we tried to pull back here. This is where sellers got more aggressive, and we saw a rejection of 404, which is also the pre-market level. You guys can see right here, pre-market, we held that level, so it was not able to take over that 404 level, and we started to push down. Net return on this trade was around 51%. All right, my adjusted cost was around 25,000. And risk was 3,300 based on my stop loss. Entry was around $8.60, and the average exit was around $13.06. Whole time on this trade, this was something that just kept going, right, in that downside direction, so it paid very well. But typically these opening drives, I try to hold them between 5 to 15 minutes, unless, again, if the stock just keeps moving in my favor, then I have pretty much no reason to exit, right? So you guys see as we start to push down up until this 398, 397 level, this is where volume starts to slow down, and this is where I scale out second and third time. I scaled out right after we had that initial push down, but then my second and third scale out was once that volume pretty much slowed down. And the strike I did was 400, which I mentioned before. When it comes to strike selection, it's every single trade is your key focus should be your strike selection and your stop loss. These are two major things about trading options that are going to be in your favor if you do them correctly. So as we had this rejection and we got into this trade here, our starting stop loss is going to be that pre-market low, or where that rejection is, which is around 404. As we start to break low of the day, this is where you want to take out your initial scale out position. And like I said, 30, 20, 20, 30. That's the rule that I follow. So we take out a little bit here, and then as it's pushing down again and the volume starts to slow down, because I don't want to give away these profits, this is where I scaled out again 2 times, once at $12.65 and second time at $14.60. And then you see that the next candle had aggressiveness coming in, and that volume pretty much spikes up. We close below that 392, and this is where you want to start increasing your stop loss and not really worrying about scaling out, right? Because our entry point is roughly around 404. So now when you have that aggressive pull away from your entry point, this is where premiums really start to give you a very good return. As it closed under 392, that's my next stop loss. And as you guys can see, we did retest that 392, but then we continue again, then we closed again under 388. So at this point, I had increased my stop loss to 388. Also, I had pretty much held the trade for almost half hour, and we get this candle that starts to break above 388, right? You guys see how volume does drop on this pullback, but SPY at this time was starting to slow down as well. So this caused me to pretty much take out my runners and the final position at $18.25. So $8 to almost $18.25. Another issue I actually had with this particular trade was the lack of liquidity in the contract, right? So when we were getting in, there wasn't really that much issue in terms of the fills, but when we were trying to get out, because there was lack of liquidity in the option contracts, it was very, very tough to exit this trade. That's also something you want to make sure that you're paying attention to before you jump in. So now it's almost about 2 weeks after that I've taken this trade. Now Crowd does have pretty decent liquidity, but at this particular time the liquidity was not that great. So this is pretty much my breakdown of how I take these opening drives. Look for a catalyst, look at the overall trend, have a stop loss, look for a pullback against the overall trend, and then when it fails and starts to retest that pre-market high or pre-market low, this is where I typically look to enter these trades. I hope this trade recap and the educational part of this video helped you guys. If you have any suggestions on what other topics you want me to do videos on, comment below, and I'll see you guys in the next video.